How ego can end your trading career. That's a topic for discussion today in the episode 19 of How to Become a Successful Trader from Market Secrets. Ego is something that hurts every trader badly. If you don't believe that ego is hurting your trading career, consider the following scenarios. Scenario 1. You took a long side trade and soon after it started going against you. You placed a stop loss to cut your losses, and your stop loss was hit, and you lost 5,000 rupees. The next day, the stock gaps up and continued to rise the whole day. You would have made 25,000 rupees profit on this trade today if you haven't exited yesterday. How would you feel if this happens to you? Now, let's take scenario 2. You took a long side trade and soon after it started going against you. You placed a stop loss to cut your losses and your stop loss was hit and you lost 5,000 rupees. The next day, the stock gaps down and continued to drop the whole day. You would have lost 25,000 rupees on this trade today if you haven't exited yesterday. How would you feel if this happens to you? In both scenarios, you have the same 5,000 rupee loss. But what about your ego and psychology? Would you feel the same way in both the scenarios? You would feel miserable if scenario 1 happens to you, and you would feel proud of yourself if scenario 2 happens to you, don't you? There is another way ego can ruin your trading, which is I will sell when I get back to even. Does that sound familiar? Let's take an example to discuss this. Consider you bought two lots of Bank Nifty options for 350 rupees a lot with stop loss at 300 rupees. The lot size of Bank Nifty is 25. So your max loss for this trade is 2500 rupees. Immediately after you enter into the trade, price started dropping, but you were reluctant to sell when it fell to 300 rupees and wait for the price to come back to 350 rupees so that you can exit at the break even price. But again, the price started dropping and it drops to 250 rupees. And now you would be glad to have the opportunity to sell it at 300 again. You will beg and pray that price come back to 300 rupees so that you can exit with the loss of 2500 rupees. But Bank Nifty gives a wild move and option price drops to 150 rupees. This 100-point sudden move in Bank Nifty is something you can see on every other day. So this isn't something that is unexpected. Now you would ask yourself, why didn't I sell it at 300 or even 250 rupees when I had the chance to get out with a relatively small loss? You have now turned a 2500 rupee loss into a 10,000 rupee loss. Now you would go mad, shout, scream, and even cry. How many of you have done this? The reason traders get into this situation is that they lack a sound plan for dealing with the risk and allow their egos to get involved. There is only one thing that is standing between you and your trading success. It is your ego. It is your ego that wants you to be right. It is your ego that doesn't want you to be wrong that stands in your way. We generally associate being wrong with pain, and it is this pain association you have with wrong that creates these ego problems. To fix this, you need to associate pleasure with small losses and pain with large losses. I know it is hard, but this will help and train you emotionally to take small loss before it becomes a large one. So how many of you can relate to this episode? Feel free to share your experience in the comment section of this video. If you have any queries, comments or feedback about this episode, please drop it down in the comment section as well. Hit the like button if you have liked this video and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.